Good evening. Our dollar has jumped back up. After sinking below 70 cents earlier this week, it rose more than a full cent today against the American dollar. At the close of business, it was worth 70.42 cents in U.S. funds. The government took some strong action to prop up the dollar. As David Halton reports, it was aiming partly at a group of currency speculators who are being blamed for pushing our dollar down to its lowest point in history.
It was tough government action to fight the speculators, especially these money traders here in Chicago, that pumped up the value of the Canadian dollar. Analysts said the Bank of Canada intervened massively on exchange markets this morning, buying enough Canadian dollars to push the dollar back over the psychologically important 70-cent U.S. mark. Then, this afternoon, Finance Minister Wilson threw the biggest punch of all. He announced that Ottawa will be boosting its foreign exchange reserves. First, by drawing on a line of credit, in effect borrowing $1 billion from American banks, and then by floating a euro bond issue, borrowing another $1 billion in Europe. Along with a recent euro-yen bond, which will yield another $400 million, these moves add up to a huge $2.4 billion increase in the funds available to prop up the Canadian dollar.
The dollar is still under tremendous pressure.
With the dollar on the rebound, some of the steam was out of the opposition attack on the government's handling of the issue. Wilson said it's only a matter of time before the speculators wake up to what international economists are saying.
They say the economy's strong, the economy's in the right track. They're saying they don't understand why the weakness in the dollar is there in face of the strength in this economy.
And this evening, there was some evidence to support Wilson's view that the sharp decline in the dollar earlier this week was not an expression of non-confidence in the Canadian economy. Reports from Chicago indicate that a small group of currency speculators there may have deliberately engineered the dollar slide in what could be a major violation of international currency trading rules. David Halton, CBC News, Ottawa.
As we just saw, it took a big effort by the government today to pull our dollar back up. The Bank of Canada plays a big role in trying to keep the dollar strong. Our business specialist, Der Ho Yin, explains just how the bank does it.
The Bank of Canada complex. Up on the 5th floor of the East Tower is a small room, one big desk and 4 traders. It doesn't look like much, but this is where it all happens. This is where the central bank, acting for the Government of Canada, intervenes in foreign exchange markets to influence the value of the Canadian dollar. But it's all done under a cloak of secrecy. Economist Michael Walker, who used to work for the Bank of Canada, says anonymity is necessary because the bank doesn't want speculators to figure out its strategy.
And indeed, in the past, speculators have indeed figured out that the bank was intervening and on what basis, and made a very substantial amount of money at the expense of the Bank of Canada and ultimately the Canadian taxpayer.
The Bank of Canada defends the dollar in 2 ways. One, by selling some of the government's foreign currencies and gold to buy Canadian dollars. Here's how the Bank of Canada does it. Its traders in Ottawa discreetly call the Canadian Bankers Association foreign exchange market in Toronto. CBA traders then let the chartered banks know they have an anonymous buyer, which happens to be the Bank of Canada. The chartered banks, acting for Canadian and foreign clients, have dollars for sale, and if the price is right, a deal is made. The end result is an increased demand for the Canadian dollar, and that's supposed to help raise its value. But this economist says the effects are temporary.
The long-run effect is that the market wins out and the exchange rate, which would have prevailed in the market, eventually prevails.
Another way the Bank of Canada tries to increase the value of the dollar is by pushing up interest rates. It happens this way. The chartered banks are required by law to keep a minimum amount of cash on hand. The Bank of Canada can reduce the amount of cash in the system by pulling out some government deposits. This means the chartered banks have to get more cash to bring their reserves back up to the level required by law. To do this, they sell investment notes, like treasury bills, at higher interest rates to attract investors. Investors who buy these treasury bills must pay in Canadian dollars. Again, the end result is the increased demand for the Canadian dollar, which should push up its value. The Bank of Canada usually defends the dollar when it's falling, but today, in an unusual move, it was defending the dollar when it was already rising. It bought Canadian dollars aggressively, made the chartered banks sell treasury bills, and even sold treasury bills itself. All that helped push the Canadian dollar up by more than a cent, one of the biggest gains ever in a single day. Der Hoyen, CBC News, Toronto.